Today, our narrative embarks on an exploration of a phenomenon that has electrified the financial sphere. A deep dive into the massive institutional inflows into Bitcoin and the insights gleaned from top executives at BlackRock. In the midst of a bustling digital era, I stand at the intersection of Wall Street's traditional precision and the wild west of cryptocurrency, weaving together threads of technical mastery and astute humor. As I paint this picture, imagine a world where algorithms and human ingenuity converge in a dance of numbers and market sentiment. Within this landscape, Bitcoin emerges as both rebel and savant, challenging conventional wisdom while showcasing its potential as a store of value and an inflation hedge. Picture the scene. Sleek monitors display streams of data interwoven with vibrant charts, each pixel telling a story of risk management and market liquidity. My mind conjures the image of Bitcoin, akin to an overworked executive with a quirky personality, burdened by market pressures, yet unyielding in its drive for independence. A touch of humor fits perfectly here. One might even jest that Bitcoin needed its own therapy session because it was feeling blockchained under the weight of institutional expectations. Yet, beneath this playful veneer lies an intricate web of complex mathematical models, algorithmic trading systems, and quantitative analysis that guide the decisions of titans like BlackRock. As I set the stage for our journey, it is clear that our audience is composed of experts well-versed in the financial battleground. We delve into technical depths, discussing sophisticated risk measures like the Sharpe ratio and value at risk R, and scrutinize the data that reveals how institutional capital can reduce bid-ask spreads and bolster market depth. This introduction is not merely a prelude to a discussion. It is a call to examine the forces reshaping Bitcoin's evolution as it shifts from a speculative asset to a bona fide component of a modern financial portfolio. With every data point analyzed and every trend explained, we gear up to uncover how Wall Street is reinventing Bitcoin's narrative. In this landscape, tradition meets innovation. My narration invites you to journey through historical market dynamics, where past asset bubbles feed into modern strategies, and where every statistic hints at the future of a digital revolution. With rigor balanced by wit, our story is set to unravel the underlying mechanics that propel institutional inflows into the digital realm. The evolution of Bitcoin from a digital curiosity to a mainstream asset class is a tale of intricate analysis and calculated risk. At the heart of this narrative lies the phenomenon often dubbed Wall Street inflows. Large capital movements derived from institutional investors armed with sophisticated risk management techniques, algorithmic precision, and deep quantitative insights. I envision a bustling trading floor, not dissimilar to a high-stakes poker game, where every card played is a complex algorithm deployed to predict market dynamics rather than a mere gamble. These are funds engineered with advanced mathematical prowess, strategy models, and an unwavering commitment to shifting the balance between liquidity and volatility. In this environment, institutions like BlackRock transform from mere observers to architects of market trends. I am struck by how BlackRock's colossal presence lends both legitimacy and liquidity to Bitcoin, diminishing the wild volatility often seen with retail trading. Their technical reports are masterpieces of financial wizardry, replete with in-depth analyses. That includes statistical measures such as the Sharpe ratio, which quantifies risk-adjusted returns, and VR, which measures potential losses in unexpected market shifts. This narrative is enriched by on-chain data that maps correlations between robust institutional capital and a reduction in bid-ask spreads, culminating in enhanced market stability. It is akin to witnessing a master chef transform raw ingredients into an artfully balanced dish, where every element contributes to the overall flavor profile. The very tools that drive these decisions are as sophisticated as they are intriguing. I reflect on recent analytics that reveal, for instance, a 15% surge in institutional capital, coinciding with a 10% decline in intraday volatility. This is not mere coincidence, but a phenomenon supported by predictive machine learning models that integrate macroeconomic indicators with minute on-chain activities. These models are rapidly gaining traction, forecasting Bitcoin's price movements with an accuracy that belies the asset's once notorious unpredictability. Such innovations are paving the way for a future where the amalgamation of human intuition and algorithmic insights crafts a more stable digital asset ecosystem. In this narrative, BlackRock represents the vanguard of institutional adoption. Their executives, with a mix of financial gravitas and a twinkle of understated humor, argue that Bitcoin's evolution goes beyond speculation. They see a future where digital assets become akin to blue-chip stocks, underpinned by rigorous risk assessments and transparent trail records courtesy of blockchain technology. The analytical models employed by these institutions are both technical and elegant, drawing parallels between the erratic cycles of past asset bubbles and the modern dynamics of decentralized finance. The result is a market that, while still unpredictable, hints at a method to its madness. A future where algorithmic trading and human strategies combine in a precise, albeit occasionally humorous, ballet. Yet, the institutional embrace of Bitcoin is not without its challenges. I ponder the dual nature of this influx. Increased liquidity and market depth are balanced by a potential uptick in regulatory scrutiny and the lurking specter of market manipulation. The irony is not lost on me. While blockchain technology offers unparalleled transparency, the complex strategies behind these financial moves demand an equally sophisticated level of oversight. The very mechanisms designed to instill stability might, under certain circumstances, invite a new form of volatility, one that emerges from the intricate interplay between technology and regulation. It is a paradox that adds an extra layer of depth to our understanding of Bitcoin's evolving identity. Observing these developments, I feel that we are witnessing the birth of a hybrid market model, a convergence of high-frequency trading precision and deep human insight. The narrative shifts toward a future where Bitcoin-specific indices and derivatives might become commonplace, serving as benchmarks for an increasingly mature market. Every data point, every algorithmic output, and every nuanced opinion from BlackRock's boardrooms contribute to a broader picture. It is a complex tapestry woven from diverse threads, historical trends, technical breakthroughs, and strategic foresight, all aimed at demystifying Bitcoin's unpredictable behavior. I cannot help but marvel at this evolution, where every statistic is a stepping stone toward a more refined and resilient financial landscape. Taking a moment to reflect, the journey thus far reveals a market that has transformed from chaotic infancy to a stage where measured risk and sophisticated models steer the ship. The institutional inflows, heavy with data and meticulous scrutiny, do more than introduce capital. They signal a shift in sentiment, one that could herald a new era for Bitcoin. It is a path lined with promise, yet fraught with challenges, where every decision is backed by rigorous analysis and a touch of irreverent humor. And while Bitcoin may occasionally need a little therapy for all its blockchain woes, its path to mainstream maturity is unmistakable. As these transformative trends gather momentum, the fabric of digital finance continues to intertwine with traditional paradigms. My narrative now transitions gracefully into an interlude that serves as a reflective pause, a moment to appreciate the intricate dance between risk and reward that characterizes Bitcoin's current evolution. In this reflective interlude, I envision the market as a grand stage where institutional maestros fine-tune their instruments, harmonizing algorithms with time-tested financial theories. The symphony of numbers resonates through the corridors of digital exchanges, each note a data point in a larger score that defines market stability and growth. This confluence of traditional finance and cutting-edge crypto models crafts an era in which the vibrancy of Bitcoin is juxtaposed with the seriousness of risk management. The space between volatility and stability is navigated with both intelligence and a hint of playful sophistication. Through this lens, the narrative is not just about the infusion of capital, but about the evolution of entire market dynamics. A future where every well-calculated move echoes with innovation, supported by a steady undercurrent of expert foresight and, dare I say, a quirky sense of humor. As I bring these thoughts to a close, it is evident that the profound impact of institutional involvement is reshaping the digital asset landscape. Each statistical measure, from the Sharpe ratio to VR, paints a picture of a market progressively aligning with the precision of traditional finance, albeit with a distinctive crypto twist. The narrative, from technical detail to humorous reflection, illuminates the transformative journey being undertaken by Bitcoin as Wall Street takes its place at the helm of digital innovation. In summary, the discussion has traversed the technical intricacies of Bitcoin as influenced by institutional inflows, underscoring the synergy between traditional financial metrics and modern blockchain transparency. The journey highlighted sophisticated methodologies such as algorithmic trading, machine learning predictions, and nuanced risk assessments, all converging to support Bitcoin's shift toward legitimacy and stability. Rectifying the unpredictable flair of early digital experiments, these developments signal a market where blue-chip reliability may soon meet crypto's dynamic spirit. The narrative encapsulates how data-driven strategies and statistical rigor are not only reshaping the mechanics of trading, but are also influencing the broader perception of digital assets. As my narrative journey concludes, I leave behind a vivid tableau of charts, data streams, and analytical rigor, interspersed with lighthearted winks at the idiosyncrasies of the crypto world. The interplay between established financial doctrines and innovative blockchain practices unfolds with the poise of an expert symphony, each element critical in crafting a future where Bitcoin evolves from a volatile maverick to a stable, mature asset. The interplay of risk, reward, and occasional humor serves as a reminder that even in the most technical realms, a touch of levity can illuminate the path ahead. With every machine learning insight and algorithmic adjustment, the story of Bitcoin continues to be written, a narrative defined by quantum leaps of technology and the timeless quest for financial ingenuity.